Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 14th of January, 2020. And this podcast video is early, as one is out for the duration of the day. Now, yesterday we produced a video entitled Gold and Silver Prices Fall as US-China Trade Deal Signing is Imminent, where we highlighted and confirmed our prediction in Saturday's weekly update that the US and China plan on signing Phase 1 of the US-China trade deal this week. In fact, it's been announced Wednesday. Well, on the announcement, both gold and silver prices fell. Not a significant amount, but by around 1%. Now, also yesterday, which we didn't mention, the US Trump administration Treasury Department declared that China was no longer a currency manipulator. Now we shall read a brief article which appeared in MarketWatch. China no longer a currency manipulator, US Treasury says. MarketWatch article published 13th of January by Greg Robb, senior economics reporter. US says Phase 1 deal includes China commitment to refrain from competitive devaluation. In another sign of thawing relations, the US Treasury on Monday formally stepped back from its decision last year to label China a currency manipulator. Quote, Treasury has determined that China should no longer be designated as a currency manipulator at this time, unquote, the department said in its semi-annual report on currency intervention. Treasury said that the Phase 1 trade deal, to be signed this week, contains enforceable commitments by China to refrain from currency devaluation and not targets its exchange rate for competitive purposes. China has also agreed to publish relevant information related to exchange rates and external balances. The report said Treasury had previously designated China a currency manipulator after the country took concrete steps over the summer to devalue the renminbi. After depreciation as far as 7.18 renminbi per US dollar in early September, the renminbi subsequently appreciated in October and is now trading at 6.93 per dollar, the report said. The first indication of Treasury's reversal on China came earlier Monday in a report by the Fox Business Network. This led to an extension of the recent rally in the Chinese yuan. In onshore trade, the yuan traded at less than $6.9 for the first time since late August. The Treasury report concludes that 10 countries require close attention for their exchange rate policies, but said no major US trading partner meets the criteria set out in two laws covering forex manipulation passed in 1988 or 2015. The countries that warrant examination are China, Germany, Ireland, Italy, Japan, South Korea, Malaysia, Singapore, Switzerland, and Vietnam. The agency noted that there has been less forex or foreign exchange intervention, in part because the dollar has generally been strong relative to historical averages, so countries have not had to grapple with appreciating currencies. Despite President Donald Trump's efforts to lower the US trade deficit, the gap in non-oil goods has risen historic highs above 4% of GDP, the report noted. Meanwhile, Treasury called on Germany, the Netherlands and South Korea to use some of their fiscal space to enact substantial pro-growth stimulus. End of article. What is interesting is that President Trump has, to be fair to him, for many years accused China of being a currency manipulator, to which there has been some truth, even though for some time the yuan has been pegged to the US dollar in the last decade. Now it's interesting to note, and if we cast our minds back, despite these protestations, It was only a little over 5 months ago, August the 5th, 2019 to be precise, when the United States officially branded China as a currency manipulator and reported them for investigation to the IMF, the International Monetary Fund. The first time such an official claim has been made against them since 1994. Now, what prompted this action was that the day before, a Sunday, the People's Bank of China took steps to limit the impact of President Trump's next round of tariffs by letting its currency weaken past the psychologically important level of 7 renminbi, or yuan, to the American dollar for the first time in more than a decade. What is interesting further, of course, is that this economic argument no longer stands, as the political pressure is such that a deal needs to be struck, and therefore the sins of the past are so easily forgiven, and now no longer apply, even though the difference in rates between then and now is of around a 0.2% increase in the yuan versus the dollar magnitude. Now, of course, the US administration will claim that it has technical models to substantiate that claim. But rest assured, if China needs to increase growth or prevent falling growth, there are a host of stimulus measures, both fiscal as well as monetary, it can adopt, which could have the same downward effect on the value of the yuan versus other leading world currencies. The main purpose of this podcast today, other than alerting you to this fact, is to show how really politics is king in most cases when national decisions are made, and so-called truths are easily altered. A little cynical maybe, but we should not be blinded by the media narrative all political parties and administrations push out. Now, the time of producing this podcast is 10:00 hours GMT, earlier than usual. And currently, the dollar index stands at 97.44, exactly the same as it was yesterday when we produced yesterday's video. The yuan versus the US dollar stands at 6.90 yuan to the dollar, so below that 7 important threshold. But can you see? Not much below. For most of our listeners, though, it's more important to know where gold and silver stand. And whilst yesterday, during our podcast production, gold stood at 1550 and silver at 1793, we did forecast that prices would fall further, having already now fallen 1%. And this is exactly what has happened. Again, not dramatically. But gold is now 1543 and silver 1770, with silver proportionately being the hardest hit, and appears once again to be heading towards our much commented on 1750 level. Most equity markets are up, with the Dow closing yesterday up 83 points at 28,907, and the S&P 500 closing up 22 points at 3,288. The FTSE index, FTSE 100, is currently up 22 points this morning at 7,640, and most European markets and Asia-Pacific markets are also up, except the Hang Seng index, which is down 69 points at 28,885. So it would not be unreasonable to see equity markets, and especially the US markets, as we pointed out yesterday, to reach all-time highs again this week, unless, of course, some other crisis or poor economic data appears in the meantime. We have core CPI and consumer price index reports for December being announced later today, but Thursday's and Friday's data will be more important to note. And of course, let's not forget the proposed signing of the US-China Phase 1 trade deal on Wednesday. Thank you for listening, and please, if you haven't already done so, kindly subscribe to our channel and press the bell sign so that you are notified of our videos and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.